Afternoon and good evening to wherever you're tuning in from. I hope you are all doing well, and I hope you survived yesterday's episode. Yesterday's episode was something, wasn't it? I'm just checking to see that we're live. Just give me a second. Good evening to There we go. We are live. We are live. Anyway, how's everybody doing? How's everybody doing? There is a big discussion point that we need to talk about today, and that is FOMC. One thing that I've noticed is, a lot of people don't quite understand what FOMC is, and a lot of people don't really understand how it impacts you. Maybe you understand how it impacts the market, but maybe you don't quite understand how it impacts you in your day to day lives. So, hopefully, today, what I'm going to do is I'm going to try and break it down a little bit for you so that not only do you understand how it works in the markets, but how it works in your day to day lives. Maybe you're having a conversation with your friends, maybe you're having a conversation with your siblings or your cousins or whatever, and they don't understand it. Hopefully, by the end of this episode, you'll be able to go back and say, well, look, this is how it works. And you can get the credit for that too. A quick shout out. Let's have a look at who's in the comments. We've got Elizabeth in the comments. Thank you very much for always supporting the channel, Elizabeth. We've got Assad in the comments as well. We've got M. Tal. Rant, then news, then charts. Well, there will be no ranting today. If you survived yesterday's episode, that should be the absolute grunt of it. A big shout out to Hafu Lol as well, who is an OG on this channel. You're here every day, mate. I really respect you. I really respect you. It's quite clear that you want to learn. It's quite clear that you want to get better. A big shout out to Hafuel. Who else have we got in the chat today? We have got Jay Zhang. We are on. Yes, indeed, we are on, my friend. It's good to see you. And AC says, salam, brother. Well, salam to you too, mate. It's good to see you. Thank you for joining the show. And we've got KAR Crypto, who is an up-and-coming member of the crypto Twitter community. I see you working very hard, mate. I see you working very hard. And finally, we've got Nadeem Olia, who is my uncle and who I'm very scared of. So no pressure, no pressure. Hassan, welcome to the chat, mate. Let me know where you guys are tuning in from. For the OGs in the chat, don't worry. I already know who you are and I already respect you guys loads. But if we've got any new members in the chat, definitely drop a comment. Let me know where you guys are tuning in from. It's always good to get new members in the chat. D. Ibrahim, good to see you, mate. Good to see you, Kalayan. Very, very good to see you. Redacted says, good afternoon, NJ. David says, good afternoon. And Manib says, big up, NJ and the gang. Welcome, 12:15 p.m. BST gang. It's great to see you guys. It really is great to see you guys. Okie dokie, right. So what we'll do is we'll talk about Bitcoin for a bit. Then we'll talk about FOMC. And then we'll see if there's any other news in the market that might impact today's price. Crypto K says, big up, NJ. Big up, mate. Big up to you too, Crypto K. It's good to see you in the chat. Rightio, let's get straight into it. Okay, let's talk about Bitcoin because we need to see what's going on with Bitcoin. So look, I tweeted this yesterday. This is what I tweeted yesterday. We've just got a few more comments coming in. Another quick shout out to Amalawa from Nigeria. Great to have you on the show. And Vampire is tuning in from Portugal. That's one that I don't really hear that often. So it's great to see that. Amazing, amazing. All right, so look, guys, I tweeted this for Bitcoin yesterday, and I'll quickly run you guys through why I'm seeing what I'm seeing for Bitcoin here today. Now, if you're a familiar person on this channel, you guys will know that I break Bitcoin down every day. The reason that I break it down every day is because the community is forever growing. We always have a couple of new members in the chat that are looking for that sort of guidance. So that's why I like to break Bitcoin down. But today we're not going to break it down completely because we have a massive discussion point, which is the FOMC discussion. Now, I noticed something for Bitcoin yesterday. All right. I was monitoring all of this price action here and I was trying to understand, what was price actually telling us during this time. Of course, we had our long plans. We did catch a lot of this. We caught a very meaty segment of this move from the mid-range, and we played it all the way up to the range high. Once we broke out of the range high, we were looking for a long plan. We didn't quite get there. So, one thing that I was talking to a friend of mine yesterday was we were talking about how how order flow works. And if we understood order flow better, we'd understand that this area here is essentially longs being trapped. Okay, longs being trapped. Now, interestingly enough, as soon as we get the longs being trapped on the way up, we notice that we get the sell off, and now we're getting that market maker profile sell off. Okay, now we're noticing here that price is starting to push up in anticipation of FOMC. So a lot of people are trading at the moment. Excuse me. A lot of people are trading at the moment, and obviously, if you watch yesterday's episode, you guys will know that I do not advocate that whatsoever. If you're new to the game, this is one of those times when you have to really sit back and observe. I know that for a lot of people, including myself, I'm a victim of this too. There is a necessity, there is an absolute urge, a need, a desperation to be in a trade all the time. All right, and I just want you guys to know that that shouldn't always be the case. There should be times when you're focused on understanding how events affect price, and in the future, if you get better at trading, then there's no reason why you can't trade in those circumstances. But for today's circumstance, when I break down FOMC a little bit for you guys will understand why I advocate against trading these kind of events. But anyway, one thing I'm wondering is, are we going to continue to get a squeeze up as FOMC unfolds, and then maybe we form a deviation here, and then we can get the sell off, or are we going to get weirdly good news today, which I really doubt? And are we going to start pushing up? Now, for me personally, the reason that I've got this plan marked out here is simply because of the range that we're in. So this range here is the range high, and here is the range low. That is the range that price has been trapped in for the better part of around 40 days. Okay, now over here we have a break of the range high, we deviate below it. This is a distribution range or deviation, however you want to call it. We break back below, we find the same resistance that we find here. We found that resistance there, we found that resistance there. If you are part of the NJ community, we actually caught this short setup right here and we played it to this level right here. So that was some money to be made there. It was around, I think, 2R. It was around 2R that we made on this particular setup. Excuse me. So what I'm wondering now is, as we get closer to FOMC, we notice that we've got this chunk here, which is resistance. We've got this area here, which is resistance. This area here, which is resistance. We've got a little distribution area right here where price eventually gets below and sells off. Now, one thing that I'm trying to understand here is, if we've broken below that 21,600 level right here, if we've broken below that 21,600 level, then one thing that I tend to think is, well, look, if we've had so much resistance before, and this is proving to be an overall deviation of this level here, it makes me wonder if we get any sort of deviation back above. As soon as we get below, it's going to be pretty much the perfect short scenario, at least to the mid-range. And if we break below the mid-range and we do something along the lines of this, that's when I can expect the proper sell-off. So with FOMC, price can get very, very, very nukey. Price can get very funny. One thing that you guys might notice within FOMC is price can do something crazy like this. Now, I don't have an example for you. It's something that you guys will see as you get closer and closer to your trading regimes. But FOMC can do something like this. And I mean it. It can do it in 1 or 2 candles. Notice how we're on the 30-minute time frame here, and I mean it. FOMC can do something like that. So you can have your stop loss here for a short, a stop loss here for a short. Maybe you're a conservative trader and you've decided that, price has broken back in the range. You're not comfortable with setting a stop loss. Maybe you even set your stop loss here way outside of the range. However, with FOMC, I promise you, it can do something violent like this. Alternatively, it can do something like this. Okay? I've seen it before. I've seen it way too many times in the market where FOMC or CPI, when the data is typically crucial, that's what tends to happen. Okay. A quick shout out to Faisal. Faisal says, "Hey, bro. Hey, Faisal, how you doing, mate? It's great to see you on the show." P Sniper says, "I don't know what you're saying, but hey, mate, good to see you." Kalayan with another comment there. And Severio with a lovely comment here as well. Hey, I saw one of your videos a few days ago. I love your content. Keep it up. Cheers, mate. I really do appreciate that. And Sky Changer says, good afternoon. Okay. Hafuel says, does anybody remember what happened last time FOMC statement released? Yes. So I think the last FOMC statement was on the 16th of June, I believe. I did a video on that day, and that was the 75 BPS increase. So look, again, it's predicted to be the same thing again today. So we are going to discuss that. So look, the two scenarios I really and truly have for Bitcoin right now in terms of whether I was trading or not is anything above this level here, I don't mind. Okay, I've made a decision that I don't mind. Price can do this, it can do this, it can do this, but anything below this level right here, anything that we do, if we say for instance go up like this, as soon as we get below this level right here, for me the deviation is done, the distribution is done. If we notice, Bitcoin did the same thing, didn't it, at the all-time high? If we quickly take a look at the daily time frame for Bitcoin, and notice here how we've got this here, which looks like a deviation, doesn't it? And then what happens is, before price gets ready to do this move here, it comes back up and it distributes again. Okay. So when you're setting your trading plans, you've got to make sure that you have a story to go with it. So going back on the M30 here, once again, I'll explain it one more time. If price gets above here, it can do whatever it wants. I'm not going to take this long, and I'm not going to take this long either. But as soon as price gets below, maybe price goes all the way up here and it gets back below here. If it gets below here, I'll short it to this level here, 21,600. However, if it breaks below 21,600, that is where I'm going to get really aggressive. That's where the size packs on, and that's where we start to slowly push towards the mid-range and much lower. Okay, the reason for the size, as you guys can all guess already, is because of the resistance that we've had here. All right, I've already explained it. Rewind the video if you're joining the stream now. All right, so for me, we did actually have a continuation plan for Bitcoin. We mentioned that if price comes back up to the 21,600, we'll look for resistance here and then short it back down. If you guys haven't joined the Telegram channel, I put the short setup in the Telegram channel too. It's the first link in the description below. We are getting close to 300 members in that channel, and I'm really pleased with the growth. Excuse me. Scarlett says, hello all, good afternoon. Good afternoon to you too, Scarlett. I hope you and your partner are doing well. Thanks for joining the show again. Great to see you. And Paul says, good morning, NJ. Good morning to you too, mate. Peace says, what is your origin, if I may ask? Well, I'm from London, mate, but my heritage is Mauritian. So if that means anything. So again, just wrapping up with Bitcoin now. 21,600 was my line in the sand. That was where I decided that if we break below 2,600, I'm not happy with the price of Bitcoin. Price is giving me signs that it wants to go significantly lower. All right. And what does lower mean? Well, now that price has proven to me that it wants to go lower, I can start investigating these lows that we have here. Number one, we've got this low here where it kind of looks like a V reversal, doesn't it? Like a Nike swoosh. This low here doesn't look safe to me. If we had taken out, excuse me, I don't know what's going on with my voice today. If we had taken out these lows here first, right? If we had done something like this and then pushed up, that would have been healthier for price. And the reason that would have been healthier for price is because we would have grabbed the liquidity there and we would have filled in some of this inefficiency here, okay? Now, this inefficiency, it is still intact. It is something that I think price will eventually come down and fill. So that's one that's one part of the investigation that I've got here that makes me think, well, we are going to come lower. The second bit is, of course, these lows here, they haven't really been swiped and they're quite clean in how equal they are. So I am expecting price to find resistance, whether it's at this level here, whether it's at this level here. Really and truly, the size is going to come in once we break below 21,600. Okay, so that's the level that I want you guys to stay focused on. If we move over to Ethereum, let's have a look, because we haven't touched on Ethereum in a little while. Let's have a look to see what Ethereum is doing. So I've got a range here that I had marked out. Let's see if that range respects. So 1014. There we go. That looks clean enough. Okay, cool. So very, very similarly for Ethereum, I'm seeing around the same thing. So a lot of people will get bullish. The reason a lot of people will get bullish, because if this was a 5-minute time frame, then essentially this is the consolidation or the range that led to the market pushing up. Notice how we didn't get any sort of retest here. We kind of just pushed up. The question that we have now is this all going to be a deviation, and are we going to get back below and really sell off? If this is all a deviation or a distribution, we've got to ask ourselves the question: the bigger the distribution, the wider the distribution, the bigger the sell-off that we're going to get, right? Similarly, how we have small-bodied candles that lead to great expansions, it's the same thing with distributions or deviations. If price finds resistance here at 1500 and we start pushing lower, once we break this area here, that's kind of where I'm going to get the confluence to short back into the range high. But really and truly, if we look at this area here, we see resistance there, we see massive resistance there, we see resistance there, we see resistance there. Is this a trap? Is this trapping people into longing price? Okay, so really and truly for Ethereum, and I think SC mentioned this when he was on the show last week. He mentioned that the real size comes when we break 1250. So as soon as we break 1250, that's when we are back in the range. That's when we've got to ask ourselves the question, why are we back in the range? And if price does get back into the range too, then we need to start looking for targets. Of course, we have a mid-range here where price has been volatile. However, if we're distributing this far up, where we've gone all the way up to around 1700-ish, and we're breaking back inside of the range, it makes us wonder, are we going to get an aggressive sell-off? Okay. And interestingly enough, if this was the consolidation here that took price above, then it even starts to give us clues as to what might happen next. So if price breaks below the range low, then essentially any sort of input back into the range should increase the probability of a sell-off. Why? Because this was the consolidation that pushed the market up. Okay, 1700 was a level that a lot of people didn't think was coming. 1700 was a level that a lot of people didn't think was coming. All right, and when it finally came, of course, we can now start to look at what happens if we break below 1250. All right, breaking below 1250 changes the game, and I mean it when I say that. It really, really does change the game. So it's something that you guys need to watch out for. It makes us wonder, is this all event driven in itself? I do have a video coming out soon. All right, there is a story that's being spoken about that I'm not seeing a lot on Twitter. I'm not seeing a lot in the communities. I don't know if you guys are too new, or maybe you guys aren't aware, but there is a story revolving around Mount Gox. Okay, there is a major story revolving around Mount Gox, whereby potentially $3 billion worth of Bitcoin will be released into the market next month. Okay, now I've already recorded that video. That video is being edited as we speak. However, it's something that you guys are really going to want to pay attention to, which further adds confluence. It might not just be FOMC that causes us to get this sell-off that we're potentially looking for. There may be more cataclysmic news that may potentially give us that sell-off that we're looking for. And more importantly, it makes us wonder as well, is a black swan coming? All right, we had a black swan event in March 2020. it makes me wonder, with all this news piling up and sort of causing a staircase of news, are we going to get another potential black swan? If we do, for me personally, I'm going to love it. I'm going to love it if we do. And the reason for that is because the lower we go, the closer we get to a bottom. The closer we get to a bottom, the less time it's going to take for us to round out. The less time it takes for us to round out, the closer we get to the next bull market. Okay. We know that something is going to have to change in order for this market to start fixing itself up. And that's not just in the market of Bitcoin, it's in the markets, the S&P, the stock market, the traditional markets. Something is going to have to give in and something is going to have to change. So the lower we go, the better that's going to be for me, the better I'm going to feel about the overall consensus of the market, and the closer we are going to get to that bull market that we're looking for, the next bull market. All right. So we'll potentially do some altcoins towards the end of the episode. Let's move on to FOMC. All right. So guys, if you haven't already, smash up the likes. We've got 60 people watching here. Can we get a like spike to something along the lines of 55 or something? That would be great. We are trying to sort of hit 100 likes per episode, and you guys have been really great when it comes to that. All right, I've noticed, for those of you who are watching it live and for those of you who are watching it recorded, you guys have really been helping out with the channel. The channel is growing. We are trying to get to 3,000 subscribers. It's a grind. It's a grind, but we are getting there. All right. So I just want to thank you guys once again. Make sure you are checking out the links in the description below as well. That is once again how to support the NJ community. And I can see a little conversation kicking off in the chat about Mt. Gox. So I told you a video is coming out on that where I will break it down for you guys. But first, let's talk about FOMC. All right. So what is FOMC? FOMC really is a meeting. Okay. Just like we have, it's a data point. All right. And it is something that you guys need to understand because it's something that affects you guys on your day-to-day basis. Now, if you remember a couple of days ago, we spoke about CPI and we spoke about inflation. All right. FOMC lines up into that in exactly the same way, in the sense that it's more about making money expensive, and I'll break this down for you. So over here we've got a graph, okay, and this graph, it might not make much sense when you look at it like this. However, I'll explain it. So in December 2017, they increased the basis points by 0.25%, and every year every 6 months, all right, they are increasing, well, every 3 months, sorry, they are increasing the basis points by 25%. Now, Henry, we did do some TA on ETH. We did take a look at ETH. So if you want, rewind the episode and you can take a look at what we spoke about on ETH. And good day to you too, Jorian. So look, again, back to FOMC. Now, what I want you guys to think of is when we've got action on this right-hand side here, I want you guys to think of the economy and things becoming more difficult. Okay, I want you guys to think of money being harder to spend when we look at this right side. And when we look at this left side, we're talking about money being easy to spend. We're talking about a decrease in the ability for you to buy stuff and spend in the economy. Now, I was having an interesting conversation with my dad a couple of days ago where he told me, he was talking to a mate from the mosque, and his mate said, are we really in a recession? I've bought a couple houses in the last couple of months. Are we really in a recession? They can say whatever they want, but I don't think we are leading up to a recession, and I don't think we will get to a recession. Now, interestingly enough, he's been saying that, but if we look at the data on the left-hand side here, it tells us that it was easier to spend money in the economy during this period of time, and it was harder to spend money in the economy during this period of time. So the question is, what are these basis points? And what are we essentially explaining when we're talking about these basis points? All right, so these basis points are essentially talking about money. Okay, when the Fed increase these basis points, it becomes harder to borrow money. So essentially speaking, let's say, for instance, the Fed increases these basis points, all right? When they increase these basis points, some of you guys might have a savings account. Some of you guys might be looking to buy a house. Okay, two different things I've mentioned there. If you have a savings account, it means that you've got money in that account where you're looking to accrue interest every year. All right? Now, let's say, for example, that interest that you're looking to accrue every year is 1%. If the Fed increased the basis points by, I don't know, 25, 50, 75, 100, let's say that on your savings account every year, you're going to, instead of getting 1%, you're going to get 1.5%. Okay, so that sounds good, right? That's bullish. However, at the same time, if you're trying to take a loan out, or if you're trying to buy a house, maybe you're looking for a mortgage, maybe you're looking to buy a new car, maybe you're trying to renovate your house, whatever you're doing, you're going to need a loan. When you take that loan out, it's going to cost you more to pay the banks back. Interest doesn't just go up on your savings accounts, it goes up in terms of what you pay back the bank too. Now, when I say it's going up, of course, we have to put that into context. We have to give a real life example. So again, I'm going to use my parents once again. 30, 40 years ago, when they bought the house that we had previously, the interest rate for mortgages was between 0.5% to 1%. Okay. And if we fast forward now to 2022, if somebody like me or you want to take a mortgage out in the UK, then it's looking like maybe anywhere between sort of 6% to even up to 15%. Now, again, these are just numbers. Let's take real life numbers and try and see what that means. So if we take a house in the UK, right, a standard house in the UK, a 3-bedroom house, we're looking at around £500,000, okay? Excuse me, we're looking at around £500,000. Now, if we take a mortgage out for us to get this house, and the banks come back and say, well, the interest rates have gone up, there's a rate hike has occurred, you're going to have to pay back 10% or higher, let's say 15% on that 500k loan that you want from us. Fine, let's do the maths. So what is 15% on 500k? Well, I think that's going to be around 75k. So to borrow £500,000 from the bank to secure this house now, we're going to need to pay 75k back to the banks just to allow us to get this loan. Now, it gets far worse than that. That sounds horrendous, doesn't it? It's not something that I would pay attention to either. It's not something that I would take interest in either. I wouldn't want to take a loan of £500,000 having to pay back £75,000. It doesn't make any sense to me. It shouldn't be that high. I'd understand maybe 1%, even I think that's high, but it is what it is. That's the times that we live in. Now, moving along, if we're taking those loans into context, we need to look at it from different perspectives too, and that is the previous market that we had. So if we look here, when the Fed was decreasing it, once we had the COVID crash or the COVID black swan event, what happened here? We got a minus 100. Okay, so what does that mean? Now, interestingly enough, when the Fed did this, it was because we printed out of thin air $2 trillion, which hit the market. Everybody got paid. In the UK, in the US, we had furlough where people were staying at home, they weren't working, and they were getting money every single month. The energy consumption prices were going down. It was a lot easier to live. And it was simply because so many people had money. It wasn't just people like me and you that were making money. It was companies and businesses too, which meant that the stocks would go up because those businesses would have enough money to thrive in that market. People had a lot more time. Everything moved over to sort of online e-commerce where there was a lot of online shopping, and everything was booming. Everything was booming. People were buying cars, people were buying houses, people were spending in the market. People were spending. Amazon stocks went crazy, all right? Now, essentially speaking, once the dust had settled and once we got back to a position whereby the market, the world was returning back to normal, where people were starting to go back out and work at these companies again. Essentially, what's happened is we've gone back to sort of 2018 now, where the market is catching up to us. Now, a lot of people thought that if we got this minus 100 reduction here, this minus 1% in terms of the reduction, that when we get this 25 BPS news here, that the market would stabilize and that, we'd be okay. And what happened next is in May 2022, the Fed increased it by 50 basis points. Okay. Now, 50 basis points hasn't been done since 1994. And if it hasn't been done since 1994, then what that means is that we have to look at previous price data. Okay. Looking at previous data, the last time the Fed did this, where they increased it by 50 basis points, it continued to grow until they had some sort of control over it. So we have got, after that 50 that was announced, we then got June 2022, June the 16th, where it was announced that it was 75 basis points. And now if we fast forward to where we are today, the Fed, we're expected to get something higher than 50 again today, potentially with a high probability 75 basis points once again. So if we take everything that we've just spoken about in the last 10 minutes, once again, how does it affect you? Well, if we get another 75 basis point increase, then what that's going to mean is, once again, money is going to become more expensive to borrow. It's going to cost more to get a mortgage. It's going to cost more to get finance for a car. It's going to cost more to just borrow money in general, whether it's from a bank or from a lender. Okay, so that is how it's going to impact you. Whether or not you're in the UK or the US or whatever, it's going to impact you in that sense. Now, if the interest rates increase, then what's going to happen is banks are going to they're going to struggle in terms of giving out these loans, which means that people aren't going to be able to get loans. So say, for instance, right, in the UK, if you want to get a house, it's not a simple case of just going to the bank and saying, look, I want to get a house. Can you give me a loan for £500,000? You have to have a 20% deposit in most cases, all right, to get a house. Now, a 20% deposit on a £500,000 loan, you're looking at £100,000. And a lot of people don't have the ability to get £100,000. But for the few who do, they go to the bank and say, well, look, here you go. I've got £100,000. Can I get a mortgage now for $400,000 on this property? Now, what's going to happen is, as the Fed increase these rate hikes, it's going to be a hell of a lot more difficult to get these loans. Not only are you having to pay back more to the banks when you're taking these loans, but the banks are going to tighten their policies on who they can give mortgages to. So once again, I'll bring it back to my parents. A good example, in that period of time in the 90s, when my parents were looking to get a house, it was as simple as going to the bank and having a chat with the manager. It was as simple as, sweetening up someone from the bank, and you'd be able to potentially get this loan. In 2010 to 2012, when I was looking to buy a house, it wasn't that simple. Banks were asking for paychecks. Banks were doing deep dives into your credit history, into the way that you spend money. Now in 2022, you can't even speak to people anymore. Now in 2022, what banks do is they've got an automated process where they scan your credit history, they go through your bank details, they go through your bank accounts, they see everything that you've spent your money on. They see how you handle your money. They see how much money you've got coming in and how much money you've got going out every month. And that helps them to make a decision as to whether or not you can get this loan. Okay. Now, as the Fed continue to increase these rates, it's going to become even more difficult to get these loans. So where am I going with this? What does this mean? If things are just going to get more hard, are we all screwed? What does it mean for us? Well, what it means for us is, number one, say goodbye to your fancy cars. You're not going to be able to buy fancy cars anymore. Number one, if you have the money to buy a fancy car, you're probably ready for the recession that's about to hit. So you're preserving your capital. You're not going to buy a fancy new car now. You're going to hold that money and save it for the dire times that we're in now. Number two, even if you did want to buy a car, a fancy new car, you're going to take finance on it. You're going to take a loan. And if you're going to take a loan on that car, then what's going to happen is you're going to go to the showroom. Hi, I'd like to buy a brand new Audi RS5. Hi, I'd like to buy a brand new BMW X5 or something along those lines. And the lender's going to say to you, all right, no problem, NJ. If you want to buy this car, let's sit down and let's hash out the paperwork. We're going to need a 10% deposit for this car. And after the 10% deposit, we'll forward your papers onto the finance department and the who are the underwriters. That's it. The underwriters will look into your financial situation and they will determine whether or not you can take this loan. Now, a year ago, that might have been okay. You might have a great credit record. You might have good money coming in and coming out every month. You might have a decent salary. You might have, you might be able to manage your finances well, and it might be provable through the documentation that they go and seek. But that's going to change now. That's going to significantly change now because the Fed have increased their rates. And if the Fed increase their rates, then lenders are going to not want to give out money even more so. Okay? Now that applies to housing too. But now, at the same time, we're all human beings. We all have our lives to live. We need cars. We need to drop our kids to school. We need to help our families out. We need a car. Every household needs a car. All right. Unless you live in the heart of central London, or if you live in the heart of New York, or if you live in the heart of any country that you're in, we need cars. We need vehicles. All right. So how do we get cars? Well, if you can't get a car because you can't afford it, that's it. You're stuck. And there's millions and millions of people that are going to be in the same position as you. Not only that, but say for instance you've got, I don't know, you've got your wife and you've got a baby on the way and you need to get a house. The bank's not going to let you borrow that money. So how do you get a house? Well, you can't. You're screwed. Now, the remaining money that you do have, you're wondering to yourself, well, hold on a second. I need to use that money to buy groceries. I need to use that money to pay for rent now because I can't get a house. I need to use that money to for my household items. I need to use that money just to live, really. Now, what happens is it causes a domino effect. Okay. If banks won't let you borrow money to buy a house, then people won't be able to sell their houses because there are no buyers in the market. That's one. Number two is if you're renting, then your landlords will see an opportunity now to increase their rents. Okay, so if you're spending £1,000 a month on rent, then what happens is the landlords, they know that the banks aren't going to let you borrow money. They know that you're not going to be able to afford to buy a house. So what the landlords do is they say, all right, we're going to now increase the price of rent by £200 a month. So now the price of your rent will be £1,200 a month. So your rent has increased. The CPI gave us negative data too, which means that instead of budgeting maybe £100 a month now, you need to budget £120 a month. Your rent has gone up. Your household items has gone up. You can't afford a car because the lenders won't give you any money to buy a car. You can't afford a house because lenders won't let you borrow that money, and interest rates are just too high to make it worth your while anyway. What does that scream to you? To me, that screams recession. To me, that tells me that the economy is going into a downturn, and it means that we are slowing our growth. Okay? That is pretty much the best way that I can explain what is going on, in a way that helps you guys understand it, and a way that it helps me too, repeating it sometimes. We've got 80 people in the chat. Can we get a little like spike if possible, please? Let's get those likes up. You know, I'm always trying to get to 100 likes on each stream. And also, if you haven't already, if you're learning something today, or if you feel as though you're benefiting from this information, then please do subscribe to the channel, because we are on our way to 3,000 subs. And if we do get that, then SE will come back on the stream as well and give us a great episode. So moving along now, we've got this article here that says the Fed to unveil another big rate hike as signs of economic slowdown grow. Now, if you've been listening to what I've been waffling about for the last half an hour, you guys, this will make a lot more sense to you guys now, because you guys will know the difference between rate hikes and the opposite, right? You guys will get it now. And if you don't get it, then just rewind the video. I think I explained it in a good way. Okay, so we've got some questions in the chat as well. I'll have a quick look at these questions. I missed out a lot of this chat. Sorry about that, guys. So what time is FOMC? So for those of you who don't know, if you go to this website here, forexfactory.com, this is the website that I use to keep up to date with all the latest economic events that are happening. So if I click on more here, now this is not my time. So if I click here, then it gives you the option to change your time. All right. So for me, I'm in London for the time being. I'm in London. So GMT +1, save settings. Now, if I go back to the home page, Forex Factory, and I hit the more button, I can see here that for London times, today FOMC is going to be at 7 p.m. my time. That's when the statement's going to come out. That's when the rates are going to come out. And at 7:30 p.m. London time, that's when we're going to be able to get their thoughts and their analysis on where they think the economy is going. Okay, so I shield this website on the streams every week. I shield this on the stream. So if you haven't already, make sure you check that out. Okay, now going back to this, well, we've got some more comments here. FOMC. What? So we got a comment here. What does this say? So Redacted says, what's rough is that due to inflation, the cost of living is going up whilst wages stagnate. It forces people to survive via credit cards or taking out loans. It's a terrible situation. That is a fantastic comment from Redacted there. It goes to show that we do have one person in the chat that is really, really listening. Okay. So again, Redacted said that perfectly. Now, the weird thing about the cost of living going up and wages staying stagnant is that it's actually harder to get loans anyway. So if we're applying for these loans just to keep our heads above water, we can't quite do that because the banks are going to say no, and credit card companies won't be they won't be so lenient on you being able to do that. And again, BTC Red Dildo. Let's have a look. Not really. Not really. There's nothing going on just yet. There's nothing going on just yet. We haven't got quite a trading plan just yet. I'm waiting for price to come back to this 21,600 level. If it can come back to this 21,600 level, that's when I'm going to look for the short. Okay. Anyway. So moving over to this now. So now, obviously, we know we've got a massive insight into sort of how FOMC affects us, how these rate hikes affect us. Let's have a look into this article now to sort of see what the Fed are saying. Okay, so this article is from Reuters. It was published a couple of hours ago. It's a 5-minute read, but the Fed to unveil another big rate hike as signs of economic slowdown grow, with the Federal Reserve expected to hike its key interest rates by 0.75 percentage point or 75 BPS on Wednesday. To battle high inflation, the focus will shift on how deeply signs of an economic slowdown have registered with its policymakers. So again, I know that this is complicated to understand, but if I go back to what I was saying earlier, again, so the reason that they increase these basis points is to try and slow down inflation. If you guys aren't buying cars, and if you're not buying houses, and if you can't afford household goods, then money is not circulating in the market. And if money is not circulating in the market, we are spending less and we are losing less. Okay, which means that the economy slows down and the inflation in itself slows down too. Now, what happens is when they release a crap load of money into the market, like they did here in March 2020, where they released $2 trillion into the market, then what happens is everybody goes back to spending. Loans become very, very low in terms of the interest rates because nobody's taking loans. Everybody has money. You want a new pair of shoes, you're going to go get a new pair of shoes. If you want a new car, well, you just go and get one. So banks turn around and say, well, hang on a second, people have a lot of money now, people are spending. Why is nobody taking out loans from us? So the banks say, all right, we're going to lower the interest rates on these loans to make it more attractive to people so that they can take these loans out from us. Okay, that's how banks get their customers, by loans and credits and mortgages and stuff like that, credit cards and whatnot. That's how banks make their money. Okay, transaction fees, kind of like exchanges in a way. All right. So in March 2020, that's of course when the bull market kicked off for Bitcoin and crypto in general. And that's when we had everybody was making money at that point, right? People who weren't even involved in cryptocurrencies were making money. There was a lot of employment going up. A lot of people had a lot of money to do whatever they wanted. And now in June 2022, July 2022, where we're seeing the complete opposite, all right, where it's becoming more difficult to take loans, more difficult to spend. And they're telling us that they're doing this in order to make the economy better. Now, the way that I see it, of course, is it's going to get to a stage where people just don't have money. People can't afford anything. We know that the price of energy is skyrocketing. To give you guys some context, how do you tell me in the comments, right? You tell me, how do you guys feel now when you go to the petrol station or the gas station? How do you guys feel? To top up my Golf R, it used to cost £60 and now it costs somewhere between £108 to £115. So we know that the energy prices are soaring. Now, in the UK, in places like Canada and the US, we're in the summer season. We're in summertime. So I'm seeing lots of pictures, summertime partying, picnics, and so forth. But what's going to happen when we get to wintertime and I want to switch on my heater? What's going to happen when you're going to want to switch on your heater? We're cold. Now, if I've got my brother here or my sister here, he or she's going to say, man up, put on a jacket or something like that. But if you've got your little kid saying, Daddy, I'm cold, can you put the heater on, please? You're not going to say no, are you? You're going to obviously do it. Now, if you do it, what's going to happen is at the end of the month, when you get your energy bill, it's going to be around 2 to 3 times what it usually is. Now, you can't take out loans. You can't afford a car. You can't afford a house. Your rent has gone up. Your household goods have gone up too. But your baby's telling you that he or she wants to put the heater on. So what are you going to do? You're going to do it. And you're going to keep losing money. And your money's going to go down. It's going to go lower and lower. If you already do have a car, you're in a privileged position. But you're going to go to the gas station and it's going to cost more to top up your car. Which means that it's going to get to a stage where people are just not going to be able to cope. All right. Now, if you're a Manchester United supporter, you're already in that position where you can't cope anyway. So if you're a United supporter, you're already suffering at your worst anyway. But if you're not a United supporter and you are a typical civilian, somebody who pays attention to the markets, somebody who is invested in the markets, then you're going to ask yourselves, well, hold on a second. If I can't keep going, what's going to happen? Well, what's going to happen is that crime rates are going to go up, because in places like Tottenham, in places like maybe Harlem or Brooklyn or something along those lines, in the darker parts of those places, what tends to happen is when somebody doesn't have money, when somebody can't spend money, they'll go out into the streets and take it from people who do. All right. And that in turn resolves to crime. All right. Give me a second. Now, if that in turn results to crime, then crime rates are going to go up. So now we've already got a horrible situation where nobody has money, nobody can get money, nobody can afford anything. On top of all of that, crime has gone up. It just doesn't make sense. It doesn't make any sense at all. The Fed will have to do something. All right. When COVID happened, a lot of people thought it was all over. A lot of people thought that, we were done as a civilization. I'm telling you, there were people that were, that Homer Simpson meme where he's got the bell saying the end is coming, the end is coming. A lot of people, felt that way. And then what happened is, companies, they adapted. Companies had to spend money in order to increase their infrastructure so that they could have working from home solutions. And other companies that couldn't do that, what they did was they they got money from the government so that they could build working from home solutions. And then we had a small minority of companies that just simply couldn't build those working from home solutions. And what they did was they just fired their employees, which led to a loss, a huge spike in the unemployment rates. All right. And moving from there, what happened was the Fed realized that they had to do something, they had to intervene. And that's when we started getting words like stimulus and furlough. And that's what happened in the market. Now, if we just take a quick look at price to sort of give us context as to where we were when that happened, well, essentially speaking, price was in this area here, wasn't it? Okay, so is this the COVID crash? Yes, it is, March 2020. So if you think about everything that I'm talking about, right, where I say we can't afford this, we can't afford that, we can't afford this, we can't afford that, this is where price reacts. And this wasn't just Bitcoin, it was all the markets. It was tech markets, it was stock markets, food markets, shares for different sort of X, Y, and Z. All the markets responded, and Bitcoin was one of them. That's the market that affects us the most. Okay, so when this happened here, notice how everybody thought that it would be the end of Bitcoin and that Bitcoin would never recover. But then once the Fed stepped in and we had words like stimulus and furlough, notice what the market starts to do. People have money now. Money's going back into businesses. Money's going back in the stock market. And suddenly we have the bull run of 2021. Okay, that is the best way I can explain it. So if we were to have something along the lines of a black swan event once more, which caused the market to do something like this, right? Then for me personally speaking, all right, I know that we have some really, really trivial times coming. I know that we're all a bit afraid in terms of what's in front of us, but the lower that price goes, the sooner that we can finally break out of that low and start, grinding back up for the next bull market. Okay. And is that going to come in 2024? Is that going to come in 2025? I don't know. Is that going to come in 2023? Maybe everybody's focused on the Bitcoin halving for the next bull run, but maybe that's not what happens. Maybe what happens is that we have so much climax in the global market and so many people are suffering that the Fed has to do something. And what they do is they print another crap load of money. They input that money into the market earlier than 2024, 2025. The Bitcoin halving becomes a non-event. And what happens is we get a bull run earlier than that. It's very, very difficult to sort of ascertain exactly what's going to happen. But what we can do is we can at least understand as much as possible so that if we do get an event or a reaction in the market, we'll know what to do. So you got a question here. I know a lot of you guys in the chat, you're asking what time the meeting is. So in London right now, it's 1 p.m. UK time, and the meeting will be in 6 hours time for me. So wherever you are, just add 6 hours on top. Andre and Dizzle says, can you talk about the Bitcoin halving? What's that? The Bitcoin halving. Hey, who is this? Who's this little bot account coming into the chat and just spamming me with all these naked guys? If you're in the chat, just watch out. Okay, we've got some bots coming into the stream and spamming the chat with all of this nonsense. And can we get a little like spike, please, if you don't mind? If you're learning something, or if you feel as though that this is helping you out, if you feel as though this is helping you learn, then please subscribe to the channel, because we are on our way to 3,000 subs. And of course, like the video as well. Help me get to 100 likes, because it helps with the algorithms. More people can see the content. And that's where we need to be right now in the markets, isn't it? We need to be helping as much people as we can, because so many people don't understand this. And by them not understanding this, it will cause a domino effect in terms of everybody that we know. The last thing that we want is for people to suffer. right? I'm hoping that everybody in this chat is just a good human being. It's not a lot to ask for morally, all right? Just to be good, just to be kind. My uncle always says, be kind because you are kind, not because you have to be. So I'm hoping that everybody in this chat, all you beautiful people, are the same. So it's our job now. You know, I've spent an hour with you guys explaining this to you. Make sure that you find at least one person that you can go back to and explain it to them too, so that they can be prepared as to what's coming. Of course, when I use words like recession, when I use words like fear, and when I use words like capitulation, a lot of people hear it, they giggle and they smile and they're prepared. Maybe they short the market, maybe they look to buy at lower prices, but a lot of people don't really understand how it impacts them on a day-to-day basis. So please make it your job today to either share this video or to at least go and give somebody the insight that they need so that they can prepare for what's ahead. Okay. Now, for me, I'm of the belief that we are going to get a bull market. I do really believe that there will be another bull market. I really do. That's why I'm here on YouTube. That's why you're here on YouTube with me. That's why we're growing the NJ community. We want to get to the stage where in the next cycle, we are so prepared that we just completely smash it. All right. But before we can get to that stage, what we need to do is we need to make sure that we're paying attention to these things here, and we're not taking it lightly. Okay. So not taking it lightly means that we need to prepare in the sense that if we get another rate hike today, if they come out and say we're going to increase it by 75 once again today, then what we need to take into consideration, this needs to blow all our minds, because you've got to ask yourself the question, when was the last time the Fed increased these basis points by 75? Okay, June 2022. That was last month. But what about the time before that? The time before that was 1993, 1994. So 1994, for me, that makes me 3 years old. I was 3 years old the last time the Fed increased the rate hikes by 75 basis points, and now I'm 31 now, and they're doing it twice in a row. So if we do get news like that today, where they come out and they say we're increasing it by another 50 points or we're increasing it by another 75 points, that's the time for us to all be holding hands and say, well, hold on a second. That means that inflation is turning into a serious thing. That means that things are going to cost more to buy. That means that we're not going to be able to get loans. That means we're not going to be able to get, it's going to be harder to borrow money. It means that we're going to struggle in general. All right. So, that is pretty much my piece on FOMC. The last thing that I can say on this topic is that I read something somewhere very recently where I think there was a 78% chance that they were going to increase it by 75 BPS. So please protect your capital. This is why I was on the show yesterday just having a go at everyone. I was having a go at everyone because people just want to trade the 5-minute time frames and they don't understand what all of this means. If you know, after being educated now and seeing how serious all of this stuff is, doesn't it make you wonder? Doesn't it make you feel as though that you need to pay attention? You need to hold and preserve your capital. Why would you want to risk your capital on a 15-minute trade when I've just explained to you that the Fed upping these rate hikes could mean a much more difficult life for you and your family? So, this is my job. My job is to come here and to educate you guys. And if you guys are getting liquidated, if you guys are losing on 15-minute time frames, and I'm not doing my job, I'm letting you guys down. Okay? That's why I came on the show yesterday and I was so annoyed. Okay? This is why I was so annoyed. I was so annoyed at everybody because I don't want you guys to be trading on the 5-minute time frames and the 15-minute time frames. I need you guys to protect your capital. I need you guys to protect your capital because we've got a bull market that I believe is coming. And if this bull market is going to come, I need all of you guys in the chat right now. We have got 80 people in the chat. I need all of you guys to ride the next bull market with me. I don't want to do it on my own. I need you guys to do it with me. And if you guys are losing money on 5-minute trades, I can't help you. So if you're watching other YouTubers and if you're watching other traders who are trying to convince you that it's a good idea to scalp or day trade in a market that's as volatile as this, and you're new to trading, take a step back. Take a step back and ask yourself if this is actually going to help you, if this is actually going to make you grow, if this is actually going to help your account and portfolio grow. Okay. Anyway, I don't want to digress. I don't want to go into that. For those of you who tuned in for the FOMC stuff and for the Bitcoin TA, that I'm going to wrap it up here for that. I'm going to go into some more news now. Interestingly enough, we have got a lot of bearish news in the market today. So if any of you guys are going to leave now, just a quick one. Please make sure, if you haven't already, to like the video, because of course I always like to get over 100 likes for these streams. And if you're enjoying the content, please make sure to subscribe to the channel. It really does go a long way. We're trying to get to 3,000 subscribers. With you beautiful people, I'm sure we'll be able to. I come live for you guys pretty much every day at 12:15 p.m. BST, every weekday that is. So if you're enjoying the content and if you want to see more, then, please subscribe to the channel. Bottom right hand corner. A last thing I'll say before we move on to the rest of the news is the links in the description below. So the Telegram channel is at the top of the description in the link below. Please make sure to sign up to that. Not sign up, you just need to click on it and join in the Telegram group. A lot of stuff. I'm sharing a lot more stuff in there as well. That's for you guys. And also subscribe to the channel, as I've already said. And also the link to the sponsor is in the description as well. So the sponsor that we have is Prime XBT. They're monitoring all the signups. They're monitoring who's actually getting involved and who isn't. The more signups they see, the more that they'll continue to sponsor this show and the more content they'll want me to bring to you guys. I've got a question here from Abdul Qadir that says, why do you think we are losing money in scalping? Well, Abdul Qadir, I tell you what, would you like me to send you an invite to the stream? You can come on live on the stream and take a live trade for us. Let me see your scalping skills. Are you the next trader SC? Are you the person who's got 10 years in the market? Or have you just recently joined crypto and trading? I'm not calling you out, my friend. I don't mean to put you in the spotlight there, but what I will say is this. I've got 5 years of experience in this game, okay? That doesn't make me qualified to talk. All I can do is educate you guys to the best of my knowledge. SC has 10 years where he's actually going at it for 10 years, all right? You've got to start taking this job as a job. You've got to start taking trading seriously. It's not something that you do for a week and suddenly you're at Prada saying, give me that, give me that, give me that, give me that. Trading, there's so much to it. It's not something that you can class as a hobby. You need to have an interest in financial markets. If you're paying attention to crypto, you need to have an interest in Bitcoin, what Bitcoin is, what Ethereum is. You need to have an interest in terms of how market cycles play out. You need to have an interest in terms of how money goes into the market and how it exits the market. Without that sort of understanding, you're not ready for 5 and 10, 15-minute scalps, okay? So please don't come with that nonsense. A lot of people are losing money in the bear market. I know that a majority of people who have been playing in the bear market has lost money. I've lost some money. A lot of people I know have lost money. So please don't pretend. Don't pretend. It bothers me when people pretend, okay? Be honest with yourself. And as soon as you can be honest with yourself, you might be able to start winning in life, all right? Moving along. So we're going to start talk. Who the fuck is this, bro? Who is this guy? SC doesn't have morals and... You know what, Abdul? Fuck off. Kick out the chat. I'm going to kick this guy out of the chat. You're annoying us. You're not saying anything that's helping people, and you're just spouting nonsense, all right? SC is my mentor. SC has displayed so much patience with myself and XO and others who have kindly learned underneath him. He's somebody who gives a lot of free content out to the community. He's at his desk and he works very hard for us, multiple hours in a day, okay? So I'm sorry for my little rant there. I'm sorry for swearing. We're going to move on. Stupid people in the chat trying to make it worse for everybody else and just ruining it for everybody else. So let's move on. So there you go. There's your update on FOMC. I'm sure that you guys will all be able to explain that back now. And if you can't, just simply rewind the video and you'll be able to repeat back what I said. So moving on, South Korean authorities launch probe into Bitcoin's Kimchi premium. Now, I don't know if you guys know what the Kimchi premium is. For those of you who were in the bull market in the last cycle, I don't know if you guys know this. I learned this quite late into the bull market too. But the price of Bitcoin in South Korea on the exchanges and whatnot, they were 20% more than the price of Bitcoin in the US and the UK. It was weird. It was really weird. And I couldn't for the life of me understand why the price of Bitcoin was so expensive in South Korea compared to everywhere else in the world. But I found an article today talking about this, and I saw it, I read it, and I was like, whoa, this is super interesting. I need to share it with everybody else here. Welcome to the chat, Joel. Welcome to the chat. It's great to see you, mate. It's great to see you. You're saying that I'm killing it every day, but in reality, it's actually you. You're the one who's joining every day and looking to learn stuff. Okay. And I'm seeing a lot of love for EXO and SE in the chat. I have a huge respect for all of you who are joining this show and who are. I have a massive respect for all of you, okay? I love all of you. You guys are the community that we're growing. This is not just the NJ show, but this is all of us. All of us create the NJ show. You guys make it a positive space in the chat. Please continue to help people in the chat. If anybody comes in with some questions, have patience with your colleagues and your friends in the chat. And if you're enjoying it, please make sure that you're liking the video. Help us get to over 100 likes. And also, if you're learning something, please subscribe to the channel in the bottom right hand corner and help us get to 3K subs. All right, share the channel with everybody that you can. Finally, there is a link in the description below for the Telegram chat. It's the first link in the description. Click on that, join the Telegram chat. I voice note you guys every day as well to try and keep more of a connection between us. And I can't obviously do that on YouTube and Twitter. So you want to be joining the In It for the Tech Telegram channel too. So anyway, going back to this Kimchi stuff. So what's happened is all this time that Bitcoin has been at a premium in the South Korean exchanges, these guys have been selling off and they've managed to make $1.5 billion in addition to everyone else's Bitcoin buys and sells. Okay. Now, interestingly enough, although they've managed to make a $1.5 billion arbitrage trade, weirdly enough, they've caught the attention of the South Korean officials. So the Central District Prosecutor's Office has reportedly opened a new investigation into illegal foreign remittances. Stupid NJ. Let me read that again. The Central District Prosecutor's Office has reportedly opened a new investigation into illegal foreign remittances over a 2 trillion Korean won, $1.5 billion. The money, said prosecutors, was generated by trading the country's so-called kimchi premium on Bitcoin. This is weird. I don't know how they did this. If I ever have my own country one day, I'm going to do the same thing. I'm going to have an exchange where Bitcoin is trading at like $1 million and everywhere else in the world, Bitcoin's trading at like 20K or something. I would do the same thing. I really, really would. And, what would you guys do? Would you guys do the same? Wouldn't you guys do the same thing? Bull market always in your country. And anyway, they're looking to investigate into this. And obviously for us, this is bearish news, okay? Weirdly, notice how it's FOMC today. We spent all this time speaking about FOMC and how it's going to impact you, your household, the market and stuff like that. But then at the same time, on the same day, 10 to 12 hours before we've got the conference, we've got weird bearish news coming out. If we've got all this stuff talking about inflation and whatnot today, then who has time to really focus on this? But the person who wrote this article clearly does, and the South Korean authorities clearly see this as more of an interesting piece of news as opposed to the inflation situation that we've got. So that's bearish piece of news number one. The second bearish news that I've got here today is South Korea slaps notification upon arrival on Terra's Do Kwon. So I'm seeing a little pattern here. I'm seeing a little pattern whereby we know that Do Kwon is a waste man anyway, all right? I can say that on this show because he is a waste man. A lot of people lost money on Luna. He's a prick. Anyway, so what this essentially means is that whenever Do Kwon enters the country or exits the country, there will be a notification to the authorities that he's done so. It's kind of like in the UK, if you ever spend more than £10,000 in cash, the authorities will be notified and all your information will get sent to the authorities that somebody has spent more than £10,000 in cash. Similarly, it's the same thing with this. Now, we covered this on the channel a couple of weeks ago, whereby we know that South Korea was investigating Do Kwon, and we know that his antics or whatever he's done with this whole Luna thing, he is going to be brought to justice at some stage. He just needs to be investigated more so. And I'm sure in a year or two, they'll come to a conclusion with this and they'll sort him out. But in the meantime, again, this is bearish news, because what does this mean for crypto? You know, in terms of crypto, South Korea have already said, well, we don't like the fact that there was a premium on Bitcoin. Where has that money gone? Whatever money that was used to create that premium has exited the market now, and we can't find it. And it's roughly worth $1.5 billion. We need to get an angle as to where that money's gone. And obviously, if we're going into recessions and whatnot, then take that money back, confiscate it, and put it into their own reserves so that they've got money to survive the recession. So it's connect the dots. It's a bit like a puzzle. Connect the dots. And there's not really much to say on this other than that. But moving on, we've got even more bearish news. Even more bearish news. So over the last two episodes, on Monday, I mentioned that Coinbase was being tackled by the SEC. And then yesterday, we got more information on that to say that Coinbase was being aggravated by the SEC. And today, on Wednesday now, right before FOMC, where we could potentially see a crash in the price of Bitcoin, Cathie Wood, so ARK Investment is a VC, right? I believe that this is a VC. It's a big VC. They harness a lot of money, not anything as big as Three Arrows, but they are a big VC. And they had a huge investment in Coinbase's coin as in dollar coin. I think Coinbase's coin is actually called coin. So they had a huge investment into this, into Coinbase's coin token. And look at this. You can see it here. The third biggest shareholder in the US largest crypto exchange, Coinbase, sold over 1.4 million tokens worth almost $75 million. So again, connect the dots, more bearish news. This type of news is actually what impacts the market. To sell $75 million worth of a token, you need liquidity, right? Where does that liquidity come from? And what is this going to do to the overall market? Is Coinbase going to have to sell more Bitcoin now to get liquidity to keep their coin token up and running? I don't know. But I find it very weird that all of this comes right before FOMC. Look, again, July 27, 2022. So that's today. More bearish news. And it's news that's impacting too. So if the price of Bitcoin dumps today after the FOMC meeting, then everybody who is sort of not understanding of what FOMC is, they're going to say, yeah, well, Coinbase is the reason behind it. Yeah, Luna, Do Kwon is the reason behind it. It's definitely South Korea. It must be the arbitrage thing that they had in South Korea. In reality, we know that it's not. It's the Fed, right? It's the Fed, the economy. That's the reason that the price of the stocks and Bitcoin and stuff, that's the reason it's all going down. So I just find it weird. And also here, once again, we've got Kraken, a US crypto exchange. Kraken is an exchange that's been around for a long time now. They are a very sturdy exchange. I believe that they tweeted a couple of weeks ago saying, we know that there is some turmoil in the market. We know that we're in a bear market, not just in terms of crypto, but in terms of the global market. They said that we know, but we have enough in our reserves to continue to thrive. So these guys know that another bull market will be coming and they are trying to survive. But once again, we've got massive bearish news where the US are saying they are potentially suspected of violating sanctions. Now, once again, I just want you guys to think for a second, and this is not like an Illuminati video. This is just connecting the dots. The way I'm seeing it is like this. there is a lot of pressure on the moment on stocks, and there is a lot of pressure on the moment on Bitcoin and the crypto market. Because we're in a bear market, we're getting all sorts of bearish news. We already know that. Now, if we're getting all sorts of bearish news, then if money is continuing to leave crypto as well, then how do these banks and how does the Fed get more from crypto and more from the stocks and more from the market so that they themselves can breathe? Well, they do it using these methods here, where they start suing and they start locking down and clamping down on these other exchanges and these other markets that are available where there is some liquidity left, and they try and bleed those dry. So in terms of Kraken, we know that they've survived in the previous bear markets. We know they've survived. They've done well in the previous bull markets too. And now, interestingly enough, the Treasury Department, interesting, that's a key word. It's coming directly from them itself. The Treasury Department is investigating whether the crypto exchange allowed users in Iran, all right, okay, to buy and sell digital tokens, said people with knowledge on the matter. That's stupid. Said people with knowledge on the matter. But anyway, the news itself isn't too important because I do believe Kraken will thrive and Kraken will be all right. But notice how we're getting political now. You know how you've got the US and you've got Iran. Iran has its own economy. The US is a central banking system that is harbored all around the world. Iran chooses to not have any central banks in the country. And now, as we are on the midst of a recession, as we are on the midst of more inflation rate hikes, that was weird English. As we are on the midst of an increase in the rate hikes, it's interesting how they're using Kraken as a medium to talk about the political situation between the US and Iran, etc., etc. And you know what they can do? They can find Kraken for like $1 billion or something. And they can just take that $1 billion and smack it into their treasury, you know? So it's something to consider as well. And a final piece of news: Aptos closes $150 million round led by FTX Ventures, Jump Crypto. All right, this is not so important, but just to wrap up the episode, wrap up the show, crypto is still thriving. Crypto is still going on. Make sure that you guys understand that irrespective of how much FUD we're getting in the market today and how much FUD we are getting in the global markets, I don't want you guys to stop believing in crypto, okay? FTX, who is owned by SBF, Sam is passionate about crypto. CZ and Sam, I don't believe they'll let us die. I don't think we're going to get any sort of situation with Binance the way we've had with Mt. Gox, the way we're having now with some of these exchanges that we're seeing. If you watch yesterday's episode, you'll know that around 40% of exchanges have sort of vanished since the bear market started. And that was because money continues to exit the market. Okay? So me personally, I'm never going to stop believing in crypto. I really don't care about this news either. It's just something to put up there to show that money is still circulating around within crypto, and it's something for you guys to pay attention to. Now, before I go, I'll wrap up the episode by saying this. Today was a bit of a different episode. I know that we didn't really focus too much on the Bitcoin plans and the Ethereum plans. I can say that we've got two potential shorting scenarios. You guys already know that as soon as price gets below 21,600, that's when it's going to really matter to me. Okay, that's when I'll be looking for the short opportunities. But the main point of today's episode was FOMC. Okay, I know a lot of you guys don't understand what FOMC is, and hopefully after today's episode, you will understand what it is. So make sure that you guys smash up the likes, especially if you learn what FOMC is today and how it affects typical normal people in their day-to-day lives. And also make sure you subscribe to the channel, share the channel with whoever you can. Help us get to 3,000 subscribers. You are part of this community. You're part of what's making this community grow. We're really building something here on the NJ Show, and I'm glad to have all of you guys and girls with me. All right. Just to wrap up the episode, the links in the description below are important. They do play a role in the NJ Show, in it for the tech as a global brand. The first link that you'll see in the description below is a link to the Telegram channel. We're nearly at 300 members for the Telegram channel. So if you do join the Telegram channel, you're early. So get yourself involved. All right. I share different things in the Telegram channel, things that I can't quite share on YouTube and things that I can't quite share on Twitter. So double check. Another thing is make sure that you're following me on Twitter at TraderNJ1. So if you're not following me on Twitter, head over to Twitter, type in TraderNJ1. You'll see my profile. It's a black logo with the NJ in the middle. Definitely follow me. I've just broken 45k followers, so a big thank you to all of you for making that happen. And there's nothing else for me to really say on the matter other than the sponsor of the shows. So we've got Prime XBT, who is sponsoring the show, and I know it's annoying for you guys to listen to this over and over again, but Prime XBT is what's making this show happen. The sponsors that they give us every month allows me to stay focused on the NJ show in terms of making sure I'm delivering good content. The content that I'm delivering, it does take a while to get all of this content put together so that I can deliver it to you guys in a diligent fashion. And the way that you guys can show support by bringing more to you is by signing up using the link below. So check it out below. It's the sign up link for Prime XBT using the code TraderNJ. All you've got to do is really sign up and just take a look. And if you guys enjoy the platform or whatever, then maybe give it a review or something. Maybe drop them a comment on Twitter or whatever saying where you found the platform, just whatever, you know. Anyway, guys, I'll leave you to it. It has been a great episode. Very, very short episode today, I know, but because we have FOMC today, we have to stay more away from trading and more focused on understanding the event and what price is actually doing. And tomorrow when we come back on the episode, we'll do a 2-hour episode where we focus on Bitcoin, Ethereum, altcoins, and so forth, okay? Maybe price will dump so much that we'll have some long scenarios. So I can see in the chat, people are saying we've hit 100 likes. We've got 101 likes. A massive, massive thank you to the NJ community. I love all of you guys. I'm going to head off now. Take care and have a lovely day, a lovely evening or morning or afternoon, wherever you're tuning in from. I'll see you tomorrow at 12:15 p.m. BST for another episode.